All right, that was Tom Hofer. He's the Executive Director of the Northwest Territories and Nunavut Chamber of Mines. We were speaking about the sale of the Ekati diamond mine. It was shut down last March, citing COVID. Now, a phased restart kicked off last November, and a full recall of employees back to work is expected now by the end of this month. Paul Zimnisky is a diamond analyst, and he joins us now from New York. Good morning, Paul.
Hi, good morning.
Well, I started with the same question for Tom. What was your reaction to the recent sale?
So this is the formal closing of the asset purchase agreement that was announced in early December.
Yeah.
So three prior institutional investors in the company are ultimately the buyers, and they formed this entity called Arctic Canadian Diamond Company, which now holds Dominion's Ekati assets.
Can you tell us a bit? That's that's industry speaking. That's why we come to you. Can you tell us who bought the mine? Like, what do we know about this new company that's formed?
So I believe it's three bondholders that have been investors in the company for quite some time. So I think they definitely understand the value of the asset. And I think everybody at this point understands the value that an operational mine brings to the region. So I think the goal all along has been to get the mine up and running again and get people back to work. And I think everybody wants an operational mine, and they want to see this live out its remaining mine life and then have a proper reclamation. So I think this was kind of the way that they were able to restructure the company to get all of that done. And we know that this has been going on for a few quarters now, but hopefully this is the solution, and this will allow the mine to continue to run smoothly for the foreseeable future.
Yeah, can you dig into that? Like, if Dominion, if it wasn't working for Dominion with Ekati, what how do you see the changes, or what's the hope for a new company, especially with all the debt that they've acquired, can swing it?
I think that's the idea of the restructuring. It's to be able to recapitalize the company so they do have that liquidity if they need it. It's been a rough few years for the diamond industry globally. Prices made an all-time high in 2011, and that led to new exploration and development, and that ultimately led to an oversupplied market for most of last decade. And I think that's why we've had limited diamond price upside. Now we're actually seeing the opposite, where prices have been weak enough where we're actually seeing supply come off. There's not a whole lot of new mine development. And I think we're actually starting to get to the point where we're having a properly supplied market. And we started to see that play out towards the end of last year, where the market was actually undersupplied. Part of that was due to pandemic restrictions and travel restrictions and border closures. But the industry actually had a pretty good Christmas and holiday season towards the end of last year, and demand for diamonds was good, and the market was actually undersupplied, and we saw diamond prices go up, for the first time in quite some time towards the end of last year, and that's kind of continued through January. So I think the key to all this is we need, stable diamond prices, and I think we have a more properly supplied market, and I think that's going to fundamentally help, diamond prices, maintain value, and if that's the case, a mine like Ekati should be positioned well.
Yeah. Do you have an insight into obviously, there's some intuitive or at least obvious ways that the pandemic would have affected all of this, but when looking across the industry, like, are there companies that adapted better during the pandemic and kept things going, or how does the pandemic kind of set the context for at least some of what's happened with this transaction?
Yeah, so I think the implication of the pandemic was twofold. We had jewelry stores pretty much across the world were closed for, a period of multiple months. So customers couldn't buy diamonds, through traditional brick and mortar stores. So that obviously affected demand. But if you're a mining company, this is such a global industry where if you mine the diamonds in Canada, you typically sell them in some other part of the world, whether it's, Antwerp, Belgium, or in Dubai in the Middle East. And because of the travel restrictions and all of the complications, regarding travel due to the pandemic, companies had difficulty selling their diamonds into the global supply chain. And I think because of that, there was, cash flow shortages for some of the independent companies, whereas some of the larger diversified mining companies, whether it's, Rio Tinto or Anglo American, they're, large diversified mining conglomerates, they kind of have more capital, more financial flexibility, so they were kind of maybe able to weather the storm a little bit better than an independent company. But it was kind of the travel restrictions and the complications that due to that, it kind of led to financial challenges for some of the independent companies.
Yeah. I know you're a little ways away over there in New York, but from your perspective, what's the outlook for diamond mining and the mines as they are now in the Northwest Territories where we are?
Again, I mean, these are world-class mines. It's a very expensive place to operate given the remoteness and every, fuel and labor, everything needs to be shipped in. And I mean, there's very impressive infrastructure. I mean, they're kind of world-class mines. But at the same time, you need, diamond prices that are strong enough to be able to justify the high cost of operating in the north. And again, I think so much of it's going to come down ultimately to where diamond prices are. But again, these are world-class mines, and they've already had many years of successful operations, and hopefully we'll see that continue.
Yeah, Paul, thank you very much for taking our call this morning.
My pleasure.